This is the anticipated book of the fall. Christopher Whalen and his staff are knee-deep in through the summer rewrites of his classic inflated How Money and Debt Built the American Dream first edition. We're going to give you a front run on the second edition right now. Your book's got to be radically different given the debt and deficit mess we're in right now.
Oh, certainly, Tom, and thank you for that wonderful plug. The last two chapters have to be rewritten. In the past, we were more worried about the dollar.
Does the election matter to you?
No, not in the grand scheme of things. I think we're nearing the end of the progressive wave of the past century, which was largely driven by my ancestors.
So it's
and their hard
FDR's
work.
fault, right?
No, it's just that when a society takes on too much, eventually the demographics tell you what's going to happen, and we have fewer and fewer workers and more old people. So we're going to be consuming capital. You know, Bob Duggar, the retired partner at Tudor, wrote a great piece about the coming drought of savings in International Economy magazine, and that's what's going to drive policy.
Bob Duggar is one of the most original, out-front thinkers I've known in the act for years.
Yeah,
He's like really twisted and different. Damian, dive in.
Well,
here
Tom,
with
I
Chris
mean,
Whalen.
I appreciate you plug. I'm going to plug another book. I'm going to take you back to 2014, Chris Whalen. Let's talk about financial stability, fraud, confidence, and the wealth of the nations. Your book back then. Let's think about the lessons learned from the last global financial crisis and now what we're seeing today with these markets. I mean, how should investors be looking? More importantly, what indicators should they be looking at to say, hey, things aren't right here. Things don't smell good.
Well, the way I look at banks, we published some bank indices earlier this year, and we weighted quality versus size. Now, you can't ignore size, but my attitude is if you want to be safe with banks, you want to own the top 25 out of the top 100. So that's a pretty harsh cut. You're basically saying you want to avoid 2/3 of them or 3/4 of them.
Damian, JP Morgan 196 down to 188.
Oh, well, wait, let's just talk about that, Chris. Let's unpack that a bit. You're talking about owning from an investor standpoint,
Correct.
right? You're not talking about keeping your deposits with banks.
No, but whether you care about income or alpha, you want to know where the good ones are. And so, for example, we just wrote a piece about Banco ZK, George Gleason. Well, George is a little bank, but he produces a lot of construction and development loans. People make the mistake of thinking he's in commercial real estate lending. He's not. He lends in the beginning of the life cycle of the asset, then he gets out. Very smart.
So talk to us about the big bank, little bank. Talk to us about that dynamic. I mean, is that not going away soon? Do you see that wedge, that divergence in the performance between big and small banks continuing?
Well, in terms of financial performance, the smaller banks do better. They have more pricing power. Mm-hmm. They tend to have much more operating leverage, too, much lower efficiency ratios. And this is why Jamie Dimon is so remarkable. Since he bought First Republic, his efficiency ratio has been in the mid-50s, which is painful for everyone else because they're in the 60s, low 70s. If you want to compete with Jamie, you've got to have a 5 handle on efficiency.
Folks, Inflated is a twisted book. I mean, chapter to chapter to chapter. The only one I know that comes close to you is Mariano Mazzucato, who's doing a Marxist thing over in England. And Mazzucato and you go chapter to chapter and say, hey, you can't understand Bloomberg surveillance unless you know your history. Yes. Are we heading towards a fifth national bank of the United States in a combo of JP Morgan and Bank of America?
I think America's headed to a large restructuring that is very similar to the 1930s when the Reconstruction Finance Corp essentially restructured everything that wasn't solvent.
Right.
When you do look at equities and you take a step back, how do you approach that? Are you looking at big versus small caps? Are you looking at tech versus other sectors? I mean, we talk about the banking sector, but what else is out there?
Well, look, half of my book is either preferred or debt. The other half is equity. I rode NVIDIA up. I kept stepping off because it was too big. It was a third of my portfolio at one point. And finally, I got out a couple months ago. So there are opportunities. I own Chevron. I own some other things. But in terms of the banks, I own U.S. Bank, Common, and Wells. That's it. Everything else is a preferred. So if you want exposure to financials, look at the preferreds because there's a lot less volatility.
Daniel Paris with a real controversial book out who says we got to get back to the time we remember where dividends mattered.
Yes.
Are stock buybacks a dividend equivalent, Chris Whalen?
No, it's a
Why?
different thing.
Discuss that.
Stock buybacks are basically about feeding the street. It's kind of the vig you have to pay to the guy on the corner, who works for Blackstone or, whatever. So to me, dividends are a more honest way to return cash to shareholders because I don't have to pay a fee.
Right.
You know?
We're trying to get you here with 92 a barrel to create some drama. 91,
Look, I'm with you, Tom.
Come on, give me the tick, guys.
Triple digits.
But
I need are you predicting triple digit oil?
When that missile flies and hits real estate in Israel, yes. Look, the world is at war. We never talk about this. The world is in a low-intensity conflict that's about to get hotter.